We've got Mr. Vijay Yadav, the General Manager of Finance at Oswal Pumps, joining us on the show. Mr. Yadav, hi, morning. Good to be speaking with you. And let's start by talking about this latest order. It's valued roughly at 236 crore rupees. It's for 10,000 pump systems. And given the recent input cost pressures and competitive tender pricing that you mentioned in Q4, does the specific contracts pricing align with your FY27 guidance? And if you can give us a sense in terms of what this does to the order book?
Yes, thank you. Good morning. We are inconsistent with the previous performance, and there is no such issue, and we are complying with the plan and budget. So there is no any kind of pressure either on the top line or in the bottom line. We will continue to be growing in this same trend as our previous performance.
Understood, Mr. Yadav. Let's also talk about the margin guidance that the company has given. It's slightly on the softer side for 22 to 23% in FY27. We understand there's pricing pressure at play, lots of geopolitical pressures at play as well. But you are also expanding your backward integration. So once that, substantiates going ahead, how much of an aid do you think that is going to be to your margins?
See, it's a margin dip is a temporary actually. Nowadays, aggressive business as per the market and trend and the business competition, we have to work accordingly. So sometimes it's not relevant ki 1% or 2% dip for temporary to get the market and serve to the customer. So this is the only temporary, and we are in the line. So there are more that we have in our as we are working in R&D and quality and service to the customer. So 23% of margin is a yes, it is visible. We are earning 25%, and then prior to that we have 29%, and last year we closed approx 25%, and the plan 23% is a conservative side, so that in the for the future there will be no as such any kind of pressure on the margin.
Okay, understood. So not seeing any pressure on the margins as of now. Mr. Yadav, with the executable order book now exceeding 29,000 pumps following this order, what level of revenue visibility does this provide for FY27? And what proportion do you expect to execute in the first half of this financial year versus the second half?
So we are in the consistent with our budget, and we are also our new capacity expansion, which is under process and likely to come in the commercial production after trial period post half. So those business, and we are expecting better as per our plan. So I think the budget, we will surpass a budget in Q4 and Q3.
Understood. So that's something that we're going to be watching out for. Mr. Yadav, the pipeline is now over 25,000 pumps, and you're also seeing a growing rooftop solar opportunity. How do you expect the revenue mix between PM Kusum, the rooftop solar segment, and other businesses to evolve over the next 2 years? If you can give us a product mix that is currently at play or the one that you're targeting.
See, we have right now, we have only major portion of government business. And along with the expansion, we are planning for the different other than government business as well. So right now we see the major portion with the government business. So later on we are expecting to go with the other business more appropriately, and the combination of these two will be achieve our objective.
We'll be watching out for that. And for FY27 too, you've guided for about 20 to 25% revenue growth, heavily back-ended towards the second half due to, of course, the transition to the PM Kusum 2.0. Just worst case, I'm trying to gauge, if the Kusum 2.0 tenders are delayed beyond Q2, can the existing 25,000 pump pipeline and the non-Kusum segments fully protect the guidance that you've given for FY27, or then can we expect to see some moderation?
No. In any case, we are very much confident in the other. We are, yes, the government business has backed us, but now the expansion program is being done considering for non-Kusum and non-government business. Right. So we are very much confident in these area. Non-government business, we are more focusing and we will achieve those targets. So in any case, we will surpass the budget if everything goes well, and we will continue with the budget if anything deviate from our plan.
So that gives us a lot of confidence, and that sounds good that irrespective of what happens on the Kusum front, your growth guidance of 20 to 25% on the top line for FY27 is intact. So that sounds good. Mr. Yadav, the company is also significantly expanding solar module and pump manufacturing capacities while you're also foraying into the solar inverter segment. Talk to us about what the Capex plans are this year and how are you looking at capacity utilization? Any number you're targeting?
Say, post Q2, our commercial production of these expansion will come in phase by phase, and other activities such as R&D and market for marketing of these products and sales personnel, everything is prepared and everything is ready at the all the places, either in terms of export or any other manner. We are very much planned and we are ready. We are just waiting for our commercial production, and gradually, as and when we will start stabilize these activities. So we are for long term. There is a huge scope in the business as well. Right now, the thing in the previous few 1 year it hasn't happened in the market a globe. So everyone is planning to store their water power. So we are also in the generation and planning these activities. So long term, either in long term or in short term, we will continue to grow in a similar trend line.
Okay, Mr. Yadav, just following up on that, can you share with us any tentative timeline as to when the commercial production of solar inverters will come into play? Any timeline?
It is more appropriate to know the date, but yes, phase by phase, post Q2, we are planning and activity is being done accordingly. We are following, and there is no, we don't see any kind of inconsistency in our plan. So post Q2, yes, a commercial production will come in phase by phase.
Okay, and lastly, Mr. Yadav, before I let you go, you did say that you're looking to reduce the dependency on government projects. Can you talk to us in terms of like what mix of your order book right now is private versus government, and if there is an aim that you have over there in terms of the ratio over there?
See, I did not say we are reducing our dependency on the government project, but we are considering to plan and expand for non-government business as well. And the right now, major portion we have on the government on order book of government business, and we are, unless we come with the product and the sustainability of the product post trial run of the our expanded capacity. Right now we do not have that much of product to sell in the market for the. That's why we are aggressively planning for expansion. So we are the as and when this commercial production will come for this new expanded capacity, that we will have market and we will sell accordingly. So ultimately we will have plan to 50-50 first, and then we will, if there is a changes in scenario, we will go accordingly.
Okay, understood. So that sounds good. And Mr. Yadav, the biggest takeaway from this conversation is that no matter what happens on the Kusum front, you are very confident of hitting that 20 to 25% top line growth for FY27. So that sounds optimistic. Margins are between 22 and 23%. Looking good over there on that target too. On that note, Mr. Yadav, thank you so much for your time.